Kia ora, I'm Jeremy Couchman, Senior Economist at Kiwibank, and I'm joined today by Menaka Pineski, who's a trader at Kiwibank's Financial Markets team. Now this week we have the RBNZ's latest monetary policy decision. That'll be the first for 2021. And like everyone else, we're not expecting the Reserve Bank to change any of its policy settings. In fact, they will keep the OCR unchanged at a record low of 0.25%. Since their last decision in November, the economy's performed much better than what people had expected. We've seen GDP growth rebound faster out of lockdown in quarter Q3. We saw a housing market being whipped up by record low mortgage rates, and the labour market has confounded with actually recording a fall in the unemployment rate to 4.9% at the end of the year. Now, Menaka, with all this good economic data, what's been happening in the currency markets?
The New Zealand dollar has been buoyed quite well by positive economic data and as well as the stimulatory environment that the Reserve Bank has put in place. So we've been trading in a strong range between 71 and 73 for the past month or so, and it's holding its ground.
Yep, certainly strong there too. Now, if the Reserve Bank's not focusing on policy change, what will be in focus? Well, clearly it'll be how the Reserve Bank communicates the new balance of risks out there. We think the Reserve Bank will take off the table any mention of lower interest rates, certainly take away any hint of negative interest rates. They're no longer needed. We expect the Reserve Bank to deliver a much more upbeat set of economic forecasts. And we also expect the Reserve Bank, within their official cash rate forecast, to actually hint at the potential for a higher interest rates next year. Now, there's enough stimulus out there in the economy at the moment, so there's no worry about them potentially removing some in the future. But what will be important for them is not to let markets get carried away they have to balance the upbeat assessment, upbeat forecasts with still the potential risk of some downside movements such as another outbreak of COVID. So Menaka, what does that mean for the currency for this week?
All eyes will be on the accompanying statement that the Reserve Bank issues on the monetary policy. And we would expect that if the market is sees this as a slightly too bullish statement, or they outweigh some of the positivities in the market, that we might see the risk that the New Zealand dollar actually lifts significantly. It could get back up to 75 out of its current range very easily if everything appears to be a little too rosy in the market. Otherwise, a overly dovish statement that highlights too much risk, we might see the Kiwi fall lower to 71 and below. So yes, it would be quite a task for the Reserve Bank after this amount of time since the last meeting to really weigh up everything that's actually going on in the economy with the positivity versus the risks that are still inherent with COVID about. So we could definitely see some significant volatility on Wednesday, depending on the statement.
Yeah, absolutely a difficult one. So the RBNZ's monetary policy statement certainly shaping up to be very interesting, and who knows, maybe this will signify the turning point for stimulus or stimulatory monetary policy in the current COVID crisis. We certainly hope so. So thank you for watching, and we'll talk to you next time.